Hey everyone, welcome to my channel. So today we're going to talk about calculated risk. What is calculated risk? Well, calculated risk is understanding that there is a risk to doing something, but the possibility of a greater benefit or profit outweighs the concerns after you have done your due diligence and research to manage the risk. You see, there is a lot of people who do very risky and high leverage plays. And what do they always say? Greater risk, greater reward, right? Lower risk, lower reward, right? And so one idea of a great risk or a high risk situation is options trading, where the risk is extremely high, but the reward is also extremely high. And because the risk is extremely high, very, very, very few succeed. Even those who do it for a living, few succeed. So when I'm talking about calculated risk, I am always going to say I'm a little above that medium. I'm willing to take more risk than most. Even being a real estate investor where I have more than one property is already more than the norm. Therefore, there is some risk associated with that the normal everyday American will not have. It was a calculated risk, especially being that I'm young and at the time inexperienced, that it was even more risky for me. However, the benefits outweighed the probability of me crashing and burning. In that time, I identified some key factors that would drive me to want to purchase these properties, which was having other people rent it out, having the mortgage be paid for by others, therefore offsetting the cost of me doing it, still maintaining my own job so that I would be in the financial situation to pay it if that need had ever occurred, and it hasn't. Being able to gain more equity in the home and then selling it for more, which has all been a possibility, but I have not sold. All those calculated risks allowed me to identify whether or not this was the right deal for me and then reap the benefits of it once I did pull the trigger. Was it stressful? Yes. Was it a tough decision to make? Yes. The first time I ever made that decision, I had went through well over 20 properties. I'm talking about not only did I look at it online, not only did I walk through and see it in person, but I even put in offers on at least four of those 20 plus properties. I put at least 4 offers in and then was outbidded on 3 of them. So again, making a calculated risk, not being emotionally attached to any business, any home, and then understanding that you need value out of these things, right? And so even now, there's plenty of homes that I wanted, plenty of homes that were beautiful, but they didn't drop the price or someone outbid me. And I have to stay firm on my number because I know the risk associated with paying more for something that skews all the numbers that I personally had and that I was comfortable with. There are people who are more risky than me and willing to pay more, or they may not be looking at it as an investment and just be wanting to live in there. And when it comes to your home, there is no number that most people aren't willing to pay for the American dream. And so when you take all of those things into consideration just in real estate alone, you can understand how difficult it can be to find a good deal and have great risk management and risk aversion, right? And so when you look at your businesses, the things that you like to do, whether it be tarot card reading, whether it be sewing hair, whether it be selling clothes, making clothes, whether it be training people in the gym, training people in speech, training people or coaching their kids, walking dogs, a pet grooming business, whatever the business is, you have to calculate the risk. How much does it cost? How much time does it take? How does this benefit me? Is the benefit greater than the risk? Is the risk something that I'll be able to sustain and then push forward with? If all of those things line up, then you might have something of value to take forward. And something that might be a high risk situation for you, someone with more experience makes it a less risky situation, therefore making it a better situation for them. And then it also provides more benefit than it does risk when you already have the experience in place to offset some of that risk. Or maybe you have more cash, or maybe you have more partners, or maybe it really just depends. So when you're going at it alone, sometimes it can be very challenging, but also it can be very effortless, because those two factors go hand in hand. When you have someone who doesn't have much responsibility and they're young, it can be effortless. Or someone who doesn't have any people around and no responsibilities, it can be very hard because they don't know what it takes, right? And so for everybody is different. You really have to understand yourself, understand what you're capable of. And then risk is different for literally every single individual. Some people are just not meant to run businesses, and therefore you may look at the stock market as an alternative option. Some people aren't meant to buy into stocks. Maybe a mutual fund or ETF might be a better play for you because it's less risky and you don't have to manage it yourself. You see, most people lose money in the stock market when they take it out during a loss. You're supposed to buy low and sell high, but most people buy high when they see it's green and then sell low when it's red. Instead, if you just hold and dollar cost average, you will definitely be in a more better financial situation, and the risk is going to be less and less as you continue to have time in the market rather than time out, especially if you go with a well-known blue chip mutual fund or ETF like the S&P 500, VOO, or others. And I'm not your financial advisor, so definitely do your own research and speak with one if you want to invest in the stock market. With that being said, how risky are you? Are you risk diverse, or are you taking calculated risks and doing your research and due diligence to understand where you are within the process of running a business, investing, or even saving? Even the bank that you choose, especially in this economy, is a risk. So who are you banking with? Why are you banking with them? Do they have a history of defaults? Do they have a history of scams or not fulfilling their promises? Or have they been good and in good standing the entire time? These are the questions you must ask yourself. It takes a lot of research, it takes a lot of planning and understanding. And once you have that, your risk is automatically less. And it will be more lessened by the fact that you're continuing to do the research and continuing to have the understanding. With that being said, I hope you like this video on calculated risk. And if you do like it, please give it a thumbs up. Make sure you leave a comment down below if you want to see more videos like this. I post every single day at 8 a.m. daily, and I can't wait to see you on the next one. Peace.